Hello and welcome to our taxation class for ATS this day. Today we'll be taking past question 2021 September, and let's see how many we can solve for today. We're going to be taking the calculation parts only, and we are on section B. Let's look at question number 1. In year 2017, Ajayi Limited received a net dividend of 180,000. Now we are told this is a net dividend, okay? And I'm guessing we are asked to look for the profit of the company, which is what I'm saying here, the tax due of the profit of the company. So we will need to change this to gross. This is a net, we need to change to gross. How do we change to gross? All we need to do is to multiply this figure by 100 over 90. That is what we need to do to change it to gross. Now, let's see. In the year 2017, Ajayi Limited received a net dividend of 180,000, from which a withholding tax of 10% had been deducted. This 10% is not 10% of 180. It's 10% on the gross that has been deducted. How do we know how much was deducted? You will need to know by doing this net that was given to you, right? All you need to do is, okay, in this gross here, I said you do 180 times 100 over 90. In this case, you do 180 times 10 because it's 10% over 90. All right? That is how you know how much has been withdrawn. So it's 10% of this 90%. If you want to know, you have to either convert it to gross, then you find 10% of it, or you do it this way. All right? So in the same year, it made a total assessable profit of 2.25 million, 2.850 million, which includes the gross dividend. So what is it telling you? This gross dividend, the gross amount is inside this. We'll need to remove that gross dividend because dividend is called a franked investment income, and it has to be removed from gross before you get the tax. All right. In the same year, dividend amounting to 700,000, including 140,000 of the dividend received gross. So it means this is what they are paying out, but the 140,000 out of this 700 was received among the gross of this 180. So we need to remove the withholding tax from this amount away from this amount to see the withholding tax due from the company. So now let's look at the first one, determine the income tax due on the company's profit. So let's start right away. So this is question number 1. Question number 1. The name of the company here is Ajayi Limited. So this is Ajayi Limited. All right. So we are looking for the A part is income tax for year of assessment 2017. All right. So we're told that our assessable profit is 2.85 billion. So that's what we're starting with. So this is assessable profit. is 2.850 thousand or 2,850,000. Now, we are told that the dividend received gross is inside this 2,850. So what we need to do, we need to less franked investment income, which is dividend income. So the dividend income, we are told that 180 is the net. We need to remove the gross. So it's going to be 180,000, which is the net, multiplied by 100 divided by 90. So that is the gross that we are removing. So this is 180 multiplied by 100 divided by 90. So it's 200,000 that was the gross. So obviously they removed 20,000 from withholding tax. That's why it is 180. So this 200,000 is what we are going to remove. So this is 200,000. That is what we are removing. So we are now left with 2,650. So this is going to be our taxable profit. That's this. So we need to look for the income tax. Company income tax at 30% of 2,650,000. 2,650,000. So that's it here. Let's look for it. 2,650,000 times 30%. That is 795. 795. 795,000. So that's your company income tax. That's your company income tax. Then, of course, if you want to look for your tertiary education tax, it will be at 2% of 2,650. So let's check it out. 2,650 times 0.2, that will give me 53,000. So 53,000 is your tertiary education tax. And that's the first part of the question. The second part is asking for the amount of withholding tax due from the company. The amount of withholding tax due from the company. So that's B. Withholding tax due from the company. Okay, so the first thing to do is withholding tax collected from dividend. So it is the 700 that they were issuing out. They said in the same year, dividends amounting, okay, Ajayi Limited also distributed in the same year dividends amounting to 700. So when they are distributing these dividends, they are collecting withholding tax. And so this is 700. You are going to collect the withholding tax, which is going to be 10% of the gross dividends that they have distributed or spent or paid out. So that's going to be 70,000. All right. Now they said this 700,000 is inclusive of 140,000 that was received. So out of this 200 that they received as gross received, right? 140,000 was distributed. So you will say less withholding tax on redistributed dividend. So dividend of 140 was redistributed. So 10% out of 140,000, that should give us 14,000. So this should give me 56,000. So withholding tax due from the company. So this is the amount that the company is going to pay to FIROS as dividend. It has to remove the 14,000 that has suffered dividend. Normally, it is 20,000 that has suffered, but because they didn't distribute the whole 200, they only distributed 140. That's why 14,000 is going. So that's question number one for you here. Now let's go to question number two. The following information is extracted from the records of Yakuhu Limited. So let's get the name down. Yakuhu Limited. We change the color now to this. Question number two, Yakuhu Limited. Question number two, Yakuhu, how's the spelling? Yakuyo, Yakuyo, Yakuyo Limited. So that's it. Now, we are told to compute the tax liability for the relevant years or for the relevant tax year. So we will now look at tax liability for year of assessment. We don't know yet. Let's check. We are given 2017, 2018, 2019. That's what we are going to use. This is the year of assessment, 2017 to 2019. So that's going to be 2017 to 2019. So this is what you are going to do now. You do them year by year. You can decide to do them in this tabular form, or you can decide to do it one year after the other. So let's assume that you're doing it like this. Okay, let's do them one after the other. Of course, I can decide to do it 2017, 2018, and 2019. I can decide to do it that way. Let me do it this way now. So the first thing here is your turnover. You can decide to put turnover. Turnover. What's the turnover? 500, 600, 800. 500, 600, 800. Okay, so now this is your turnover. All right. So this is the adjusted profit, 450, 560, 650. So I will come here, adjusted profit. So now this is 450, 560, 650. Okay, after adjusted profit, you are going to less capital allowance. How much is our capital allowance? 250, 300, 400. So this is 250. This is 300. And this is 400. So when you less it, what you have is taxable profits. So 250 minus 450 will give me 200 remaining. This is your taxable profit. 560 minus 300 should give me 260. And here, this should give me 250. Then your tax, which is CIT, is going to be at 30% of taxable profit. So you calculate it now. 200 times 30%, that should give me 60,000. 60,000. I can decide to do education tax immediately. Tertiary education tax at 2% of adjusted profits. So adjusted profits is 450. 2% should give me 9,000. Let's confirm 450,000 times 2%. That should give me 9,000. All right, here I will check 30% of 260, 260 times 30%, 78,000. Whereas 2% of 560, that will give me 11,200. All right. 30% of 250, that will give me 75,000. Then 2% of 650, that should be 13,000. 13,000. So that's it. That concludes question number 2. Question number 3 is asking about the things that are specially required to be furnished in a notice of appeal to the relevant tax authority. You need to furnish the year of assessment. You also need to mention the assessable profit that is in dispute. You also need to mention the taxable profit that is in dispute, the tax liability that is in dispute. Then finally, you need to mention um you could also mention the capital allowances that are also um used to reduce taxable profits the accessible profit to your taxable profits. So all of these things are the things that you need to furnished to the tax authority. Even your tax file is also the tax file number also needs to be furnished to the tax appeal or to the relevant tax authority, which is the yeah, which is also the tax appeal tribunal. State the procedure of allowing decision of appeal commissioners. State the procedure of allowing decision. I won't want to concentrate on this. These are things you can check at the solution portion of this past question. Let's get to calculation. Question number 4. Ola Nigeria Limited. All right. So let's see. This is question number 4. Ola Nigeria Limited. So let's change the color of the pen. So this is question number 4. Ola Nigeria Limited. All right. So let's go. Ola Nigeria Limited is a company that engage in hostel services. So this is hostel services. And I'm thinking, okay, so VAT is involved here. The company prepares financial statement up to December 31st every year and is a registered VAT agent. That's fine. In the company's 2020 ledger, the VAT shows the following. So now we'll be looking at the input VAT. The input VAT are those things that are being charged by the company on customers, which includes VAT on food and drinks, which is this, VAT on accommodation, VAT on other services. So this is where we have the output VAT, sorry, output VAT. Then the input VAT, this is input VAT, all the VAT you suffered in order to make the sale. VAT paid on kitchen materials for kitchen, this is one of them. VAT paid on drinks for resale, this is another one. VAT paid on equipment for the room, no. Equipment, no. VAT paid on legal professional service, no. VAT remitted to the FIRS, this is amount that you have already paid to the FIRS, and this is balance of your VAT account. So now we are asking here to compute the total amount of VAT due to the FIRS. So this is the total amount of VAT due to the FIRS for 2020 tax year. Total VAT due to FIRS, year of assessment 2020. All right. So what do you do now? This is output VAT. Put my Naira sign, output VAT. What are the output VAT? VAT charged on food and drinks. So this is VAT on food and drinks. Of course, VAT should be spelled as capital letters. These are acronyms. VAT on food and drinks, 15,400. So this is 15,400. This is already converted to VAT already. This is a VAT account. VAT charged on accommodation, 25,100. So this is 25,100. So I will say VAT on accommodation, 25,100. Then the next one is VAT charged on other services, 9,100. So this is VAT on other services. I can put a second naira sign here. So all I need to do now is I'll add all of this. So this is total output VAT. So I'll calculate now. 15,400 plus 25,100 plus 9,100. That gives me 49,600. So I'll put it down here. 49,600. That's your output VAT. So I will not say less input VAT. So let's check all the input VAT. All these are outputs. So let's check the input VAT. Input VAT number one, VAT paid on materials for kitchen, 8,800. So I'll come here, 8,800. VAT on kitchen materials. And the next one is 1,000. VAT on drinks for resale, 1,000. So this is VAT on drinks for resale. Okay? Is there any other VAT again? No. So the output, the input VAT here, so I will say total input VAT will be 9,800. 9,800. So this is 9,800. Remember we said less, so I'm going to put it in brackets and I'm going to less it from 49,600. So when I less it from 49,600, this is 9,800. 49,600 minus 9,800. We have 39,800. So this is 39,800. So this is VAT due to FIRS. So this is what we are asked to calculate. The second question is asking of ascertain the balance remittable for that year. Balance remittable for that year. So I will come here. This is the second part. Balance of VAT remittable for the year. So we'll start with VAT due for the year. Of course, it's 39,800. You just calculated. VAT paid for the year. VAT paid for the year, we are told is 20,000, which is this amount. 20,000 is paid. 20,000 is paid. So what is remaining as a balance is 19,800. So balance remittable stroke due is 19,800. This is not to be confused with this 18,100. This is not the balance remaining for the year to be paid. This is as a result of these two that was deducted. If you have to add back this 1,700 to this 18,100, you will get 19,800 that you have here. But you see, when we were doing our input VAT, we didn't take this, we didn't take this. So it can never be this balance that is we have here. Then question number 5. So Lady Adama, so we'll go again, question number 5. Lady Adama changed to a different color. So this is question number 5. Lady Adama. Lady Adama is here. Question number 5. Lady Adama has been in business for many years. Who has been in business for many years, prepared her accounts to 31st December every year. And when she decided to prepare a 15 months account to 31st March 2008 to make a permanent change. Okay, so 2018 is the first year of change. So this is the change of accounting date. So we say, what are we asked to do here? Required, compute the assessable profit based on the rules of account, change of accounting date. Compute the accessible profit. All right, so we are going to be looking at accessible profit for year of assessment 2018, which is the first year, and it will be for 3 years, 2018, 2019, 2020, down to 2020. This is what we are going to do for 2020. So what I'm going to do here is I will say this is old date, December 31, new date, this is March 31. Then I will say assessment selected. So we'll start with year of assessment 2018. Then we have year of assessment 2019. Then we'll have year of assessment 2020. Then when we have done that, we will now check the sum. When we check the sum, it will help us to know which we will select. So let's start with 2018. We'll start for year is workings, year of assessment 2018. So let's start with old date. Old date is from January to December 2017. So old date will be January 1, 2017 to 31st December 2017. So do we have it here? We have 12 months up to 2016, but we have 15 months up to March So it means January 1, 2017 should be inside these 15 months. So the 12 months we are looking for is inside these 15 months. So we are going to be taking this here. We are going to be taking 12 out of, okay, we're going to be taking 12 out of 15. So this is 2017. That's what we are looking for. And it's inside here. We're going to be taking 12. But wait a minute. Okay. Yeah, we're going to be taking 12 months there. So that will be 12 over 15 times 300,000. What would that give me? 12 divided by 15 times 300,000. That gives me 240. So this is 240. I'll take it straight down here. This is 240. But hold on a minute. Then we have 20 2018 new date. So we can come here, new date. So we can do the new date immediately. New date is going to be from, so it's going to end, since it is 2018, so it's going to be ending in March 31st, 2017. So it must have started from April 1, 2016. So where can we see April 1, 2016? April 1, 2016 happened to be here, where this 180 is. April 1, 2016. So we have our April 1, 2016 from here. So from April to December is 8 months. It's 9 months rather, because January to March is 3 months. So we are going to be taking 9 months out of 12 here. So it's going to be 9 over 180. So this is going to be 9 over 12 multiplied by 180. So that will give me what? 9 divided by 12 times 180. That gives me 135 here on the first hand. 135. Then we still have, we've taken 9 months. So the remaining 3 months is from this 15. So that will be 3 over 15 times 300. So of course I'm going to take this 135 and add it to whatever I have. So it's better I copy it now, because I'll need 135. So I've copied it just to be on the safe side. I've copied it. So I'll do 3 over 15 times 300,000. That gives me 60. So here is 60. So if I were to add these two together, 60 plus 135. 60 plus 135 give me 195. So this is 195. So I'm taking the 195 up here and putting it here. This 195. We don't know what we're going to select yet. Okay, so the next one is 2019. So we'll do the workings for 2019. So this is year of assessment. Year of assessment 2019. So I'll start with the old. So it means the old is from January 1, 2018 to 31st December 2018. Where can we find January 1, 2018? We have to find it inside these 15 months. And so from January to March is 3 months. So we're going to take these 3 months here. So 3 months. So this will be 3/15 times 300, which we've calculated before. That gives us 60. Then plus, we'll take 9 months. 9 months from this remaining 12. So 9/12 times 200,000. So this is 200,000. So let's see what it will give us. Let me this 60,000. So 9 divided by 12 times 200,000. That will give me 150. 150. If I were to add 60 to it, to give me something 210. 210. So this is 210, which is what I'll put for the old. 210. Okay, so for the new, since it is ending in March 31st and we're in 2019, so it has to be March 31st, 2018. It must have started from April 1, 2017. So where can we get April 1, 2017? Of course, April 1, 2017 must be inside these 15 months. So it's going to be 12 out of 15. So we are taking 12/15 times 300,000. We've calculated that before, which gives us 240. So here, 240. So that's what we are going to take up here. 240. Then for the year 2020, so let's go for 2020. Year of assessment 2020. Let's say old. Old is supposed to be from January 1, 2019 to 31st December 2019. So we have January here. But unfortunately, have only March. So let's just take 3 months. So we are going to take 3 months. So we'll say 3 over 12 times, how much is that? 200,000. 200,000. Just 3 months that's available to us. 3 divided by 12 times 200,000. That gives us 50,000. 50,000. So because we have taken 3 months here, for the new, we can only take 3 months. So let's say new. Supposed to be from April 1, 2018 to March 31st, 2019. And that's what we have here, 12 months up to March 31st, 2019. Okay, normally it is here 200,000. But since we've taken 3 months, normally it's supposed to be 200,000. But since we've taken 3 months up here, we are still going to take 3 months. So divided by 12 multiplied by 3, which gives me 50,000, just like we calculated here. So 50,000 in each case. So we'll put 50,000 here and 50,000 here. So let's check which we should go. Now, without even looking at calculation, I know that this is equal to this. Now, this is equal to this. So the deciding factor, this one is greater than this. So this old date will give us a higher assessment. So we are going to be using the old date, because if we add everything here, let's just add just so that we'll do it conventionally. We have 240 plus 210 plus 50. That gives us 500 is the sum. Of course, the second will be less than 500. We have 195 plus 240 plus 50. That gives us 485. 485. So we choose the one with the highest. So what is selected here is 240, 210, and 50. So these are the years of assessment for the 3 years based on the rules of change of accounting date. All right, so this is question number 6. We are not going to take that because it is a theory question. So we've been able to solve all the calculation question in September 2021. In our next class, we are going to take another past question and try to solve all of them, all the calculations for that year. Thank you so much and see you in the next class.